Hello, everybody, and welcome to Profit Mission Control. This is Matt Trader, and today is Sunday, November 12th, 2017, and we're going to go over the weekly recap for the week of November 10th that ended on Friday, November 10th, 2017. It's been a while since I published a recap video. We've had two back-to-back fantastic weeks, and I would say this week was pretty much one of the best weeks Profit Mission Control has had over the last few months. I'm not sure if it's the best week for the whole year or not, but certainly one of the best weeks for the last few months. So a lot of it is because we are still seeing, this is November. November is always an active month. A lot of large funds, people pouring into the market before the end of the year to kind of maximize their portfolios, to pretty up their books, and that brings in more momentum and more volume into the market. Typically, historically, November through January are very active months. I would say November, December are very active months. So that's one of the reasons why we saw excellent profit last week. So with that, let's go quickly and take a look at the gains. I'm going to start with the portfolio, which I typically don't, but there is a milestone. So this week we added up $17,600 on the portfolio. Last week, if you follow me, you know that I crossed the $400,000 threshold or milestone from the beginning of the year, starting at $25,000, taking 600 trades roughly, and fixing my trade number of shares size to 2,500. So that was last week across the 400,000 milestone. This week we add another 17,600, putting us at 417,000 for the year. 1,500% growth from January. Worth noting is, as if you follow me, you know that at the beginning of August, sort of like somewhere around this time frame, I switched my limit on the stock share price from used to be like around $10 to $12. Now I'm trading stocks up to $60, and that has actually significantly helped propelled the momentum a little bit better. You kind of flatlining, and then we're pushing towards these kind of limits here. So fantastic growth, and it's all because of the disciplined risk management, understanding your profit to risk ratio, and understanding the stocks that you trade, finding the right stocks using market leading software like Trade Ideas, and just putting the plan together and executing a plan, and as much as possible taking your emotions out of it. So for this week, we had 15 total launches. If you recall, last few weeks, I've had sort of a pattern forming where I would start the week pretty bad, and then start picking up my pace better towards the end of the week. I was also taking profit a little bit too early, trying to just get my profit and get out, just because the market is starting to push higher and the momentum is there. This week I decided to stick longer with some of the trades, and it did pay off. Additionally, also at the beginning of the week, most of my profits were made at the beginning of the week, so I kind of took it easy the last 3-4 days. I mean, Monday, Tuesday were very good. I had, I think, a launch list on Wednesday, and then I didn't have anything on Thursday or Friday. Just kind of sat down and did some intraday trading. But from the launch list perspective, out of the 15 launches we've had 10 winners and 5 losers. And if you notice, the average profit per trade on the winners was significantly higher than the actual profit target. So when we have profit target of 2%, which is roughly, I thought I had these put in dollars, but maybe next time I will update this so that reflects the number of just the cents versus the percentage. But overall, the actual winning trades were higher than their profit target called for. Always the loss is at or above the loss target. So I never take a loss more than I need to. I respect my abort prices religiously, Yeah, there's a couple of one or twos here or there where I might decide to hold a little bit longer, but in general, I stick to my abort prices like glue. And that reflects in this profit to loss percent actual. So most of the profit to risk planning was 128%, which is the average of this column. But in reality, because I stuck with some of the winners longer and cut my losses as planned, I ended up with an actual profit to loss of 274%. That means my average winner is 2.7 times my average loss. Overall profit per share was $7.04. So again, if you were trading these stocks, let's say with 100 shares, you multiply 100 by $7, that will give you net profit. Well, gross profit without commissions. For my case, I always take 2,500 shares, so $7 times 2,500 shares, that ends up being that $17,600 for the week. Overall, percentage-wise, 1.3% on average per trades. Average holding time is about 2 days, and the one that was very evident was SFUN, and I've talked about that several times. That ended up being a loser after I held on to it the longest, but still ended up bailing out with a loss versus a win. I've also made an interesting thing with MOD. MOD was a launch on Monday, and it hit the launch price, and then it quickly reverted down to the abort price very quickly, so I ended up with a loss. And I told myself that I will, well, actually this was held from last week, I apologize. But then on Monday, when I exited, aborted here, I said I'm going to re-enter if it crosses the 23.55 again and take profit, but ended up being a second loser. So that's why you see it twice here. I tried to recover from a loss, but ended up having another loss. And that, that contributed 35-cent loss overall per profit per share. Could have been avoided, but the setup looked good, and I wanted to. I've seen, in the past, again, some of the launches that failed turned out to be winners if you had stuck with them or if you had re-entered them. And I don't do it every time. Sometimes I do it, sometimes I don't. In this case, I tried to and end up being a loser. PAGP was a sort of a larger than average loss. I typically try to target 40-cent max loss, which puts me at $1,000 per loss per trade. This one was a little bit, I gave myself a little bit legway because it was sort of volatile. The average to range of the stock was significantly high, so I said, well, 51% as a loss target with the potential to make 40, let's see, another 50 on the side. I mean, the profit risk ratio was about 106%, so almost same profit to risk, ended up being a loser. But I'm very, very happy with all the winners. Again, more than a dollar on a stock is really, really good, especially if you hold on to it basically 1 day or less than 1 day. So we can go some of these trades and take a look at them. CTRL. Let me go back to the charts here. So let's take a look at some of this. Before we do that, kind of a quick overview of the market. Looking at the SPY. SPYs has prior week was starting to stage still all-time highs, stalled a little bit at this level, found some resistance, and now it's pulled back. We had a gap down day, but then buying the dip seems to still be in effect. And then the next day, it's kind of doing a sideways. This was an interesting increase in average volume. And then this is my 25-day mark, and I keep that to track the distribution days on the SPY. Distribution day, you can go to investors.com, find out more definition of it. But the way I track it is just look at if a red day had a volume higher than the day before, regardless of whether it's a 1% drop or more, or 0.5% drop or more on the SPY, I consider that as a distribution day, just kind of looking at it, in my head and saying, oh, are there really signs of a potential reversal or not? So looking at the 25-day mark over the last 25 days, I could count there's 1 distribution day, 2 distribution days, 3, 4, 5, and 6. So there was 6 distribution days, and the legend says that if you have 7 or more, then the market might be staging a correction, imminent correction. Doesn't mean it's going to crash. It just means it's going to more correct. The likelihood of it correcting versus continuing higher is higher. So a day like this where you have a gap down, but then a lot of buying with huge volume, sort of tells you that although the percentage gain there was not significant, but sort of tells you that you might one of those 6 days might be washed out. But I'm just saying 6 for now. If we have a 7th day, just be aware that the market might be taking a breather, maybe pulling down to some level of support, probably the 25 255 on the SPY, maybe even lower to the 254, not sure, but just keep an eye on the distribution days. The IWM showed more weakness than the SPY, and that's kind of the middle, the Russell 2000 ETF, and it tracks the mid-cap stocks, mid and small cap stocks. And that one is kind of pulling back. It's showing either consider it a handle or just a consolidation with a trending downwards. There has been some signs here to short where I've had the 5 MEA cross the 10 MEA, cross the 9 MEA, and with above average volume, that kind of gives me a signal. Longer short, this is kind of confused, so the market doesn't really want to know. It certainly looks like it might be heading towards testing this level of support. It found support here, so Monday we'll see what will happen. If it continues to go sideways, or it goes up, goes down. And Qs has been still pretty hot. I mean, the Nasdaq is still moving higher. Again, had a little gap down, 2 days of sideways movement, but still continues to show strength. All right, let's look at some of the trades. So the first one we had, the biggest winner was CTRL. That one was on the list on November 6th with a launch plan at $32.05 and a target profit at $32.70. I apologize, I don't have the profit window on this one just because this was one of the latest one on Thursday or Friday. I didn't have time to put it on there, but it launched on the November 6th, which is the day that we put it on the list. So it came out of basically this year. So this event on the 3rd, it staged a nice push forward and gave half of it pretty much back. So the idea was to, if it breaks through that again, it will try to test this range again. And that was the trade, was to go above $32.05, which was somewhere over here, and punch all the way through, maybe close to that top of the resistance of the day prior, and that just gave us $1.55. It actually ended up going to $33.60. I took the profit at $33.60. It pushed a little bit higher to $33.96, but that was kind of the plan. So it was a very good trade, and the volume was really high the last 2 days, and then it's kind of pulled back, forming maybe a handle, potentially continuing its move upwards. Next one is NKTR, and that stock was also pretty strong winner for us, and that one came on the launch list for the November 8th. Now let me see if I can get an NKTR. So that was on November 8th, and look at that, how much it did after that as well. So the plan, it was based on this performance and after our action. So it went on the list for the 8th with the plan to open at $29.40 and then push all the way to $20 to $30. That was the plan, to take profit at $30. It made a significant move to $31.64, and I actually ended up taking profit at $30.90. So somewhere around this area here, $30 to $30.90. That's kind of where I took profit. So it was a very strong winner, $1.50 move, and look what it did after that. I mean, there was no reason really to exit other than just not being too greedy. But then the next day it moved higher. The next day even moved higher. I mean, you could have potentially held it to $33.80, $33.90. So that's another almost $3 move on this one. CDEV was another strong winner. We made $1.31 on that one. The plan there was to launch at $20.54 on the date of November 6th. So it came on the list on November 6th. It launched on November 6th, which is this day here. Based on the performance here, it was pushing higher. The idea was to push beyond this resistance of $20.54 and a profit target at $20.95. And it did just like workbook. In fact, I got profit at $21.85 on the following day, I believe. So that one was held for one day, took profits on the 7th, and then there was potential to go all the way to 22.06, but I exited at 21.85 around this area here. That's where I took profit. So very, very strong move. Then it dropped, gap down. Maybe it was results or something, but we took our winning and moved out of the way. LYV was another strong winner. Live Nation Entertainment. The idea there was to go at 44.08 based, and this one came on the list for November 6th as well, right here, based on this push. And I had a long indicator signal. We had a strong crossover of the 5 over the 9 with above average volume. That tells me buyers are coming in. So the idea was to break this level at 44.08 and looking for about a 45 cents, 45 to 50 cents profit. 44.55, ended up taking profit at 45.25, which was another almost $1 move above my profit target. So this is where we took profit here at 45.25, right there. Somewhere around there. I don't know why it doesn't like it. I have to really type it in. Here we go. But anyway, very solid move, and then it corrected a little bit, but the stock itself looks pretty good. The pull down here was on below average volume. The breakout was on above average volume. If you believe the charts, this means the stock is probably going to continue to go higher once this handle is completed. So whether it bounces off the 9 EMA or the 50 or the 100, we'll have to see. But I'm out of it. But if you want to continue to hold onto it, you think you're looking at a swing trade, that might be a good one. BKE was the next one where we pulled about $1, almost $1 worth of profit. The plan there was to launch at 1807 with a profit target of 1850. And this one came on the list also on this one was on November 3rd. So we took profit on the 6th. So it launched on November, let's see here, it launched on November 6th. So this was right here. It broke through that, and this did the whole entire move there. And I took profit at 1905, which was somewhere over here. Very, very strong move. Next day it pulled back, but still kind of hovering around this consolidation area, and then it looks like it might be staging another breakout. So that was a very good win. IDTI. So IDTI, I think we had it in the past as a potential. I think we've traded this in the past, but then the new trade was 31.58. So over here, it came on the list for November 6th, right here at 31.58. I apologize again, these are not all marked for today, but the idea was to break this range here and then push towards this range here. So 31.58 to 31.98, and look what it did. It pushed even higher to 32.33. That's where I took profit, 33.2 or 3. So held on to it for one day, made a nice profit, and then it continued to go sideways. NRG, maybe this will be the last one of the winners we go over. That one was a 46 cent winner. Launched at 28.17. The idea there was to go at 28.17 and push towards 28.50. I ended up taking profit at 28.63. So somewhere over here. That's kind of the days it came on the list on the 6th. It launched on the 6th, and I held on to it for one day and then took profit here at 28.63. So hasn't done anything wrong so far. I pulled a little bit below average volume, staging another up move. So NRG might be a stock that continues to go higher. All right, and I think I'm gonna just show one of the losers, which was PAGP. That was kind of the biggest loser for the week, and that one came on the list for November 8th, and it launched very quickly at the beginning of the market. Just if you look at it, you just basically tapped the launch price and then gave it all back and ended up boarding, and then the next 2 days it went down. So that was kind of a weird action there. Although I really think the setup is still valid. Maybe if you push it up a little bit above this level, my initial plan was to enter breaking this the top of this candle, because I got a good strong long signal above average volume, the 5 crossing the 9, as well as kind of clearing up this resistance area here. It pulled a handle below average volume, so you can keep it as a potential second launch on your watch list, especially if it breaks this 50-day moving average. I think it will shoot through there and then has an opportunity to clear this area all the way to this level of resistance here before the 100-day moving average. So this one looks fairly interesting, but I made a loss on it. It does have a strong support volume, so had multiple days where it looks like there are a lot of buyers coming into the stock. All right, so let's go back and review some of the other stats and share some of the trades that are still active. So looking at the performance card for the year to date, if you like statistics, like to look at performance, which I think everybody should be doing to understand how they're doing overall. This is the results as at the end of November 10th. We've had total launches 622, with 225 of them being losers, so that we had to abort, which represents 36% of the total trades or launches. The total successful launches, which considered to be the accuracy, so at 63.8, we've still been kind of steady over the last few weeks. We haven't moved away from that. 397 launches were winners. If you break that 397 with launches to 3 categories, one of them where the launch was above its target, 219, which is 35% of the total, but 55% of the total winners. So 35% of all total launches were at above the profit target, initial profit target, which is really good. The launches that were at target, roughly around 9%, which is about 14% of the overall launches. And the launches that were less than the target are 121, which is 20%, which represents 30% of all the launches. So this is again where I think the biggest opportunity for me and for my system is to try and bring that number down and either shuffle it to the at target or above target. The reason was, if I wanted to automate my system, I need to eliminate the human factors, right? So this is the human factor. This is me deciding to take profit early versus at the target or letting it go. For example, if you have a trailing stop, trailing profit stop. If I want to automate the system, there's 30% of my trades that are kind of up in the air. They could swing, either become losers or become winners, depending on some judgment call. So I don't know how to fix that yet, but I'm aware of it, and I just need to kind of get focused on to say, how can I make this number go down? I really would like to spread that more towards these 2 categories rather than relying so much on me being active and deciding to pull the trigger or get out sooner than later. Overall profit to loss ratio for the whole year is 248%. That means my average winner was 2.5 times roughly my average loser. The biggest win we've had I converted this from a percentage to dollars because, again, I'm trying to move now into the dollar rather than dollar and cents versus percentages. It represents really true performance based on a fixed number of shares. So that's my strategy. That's what I want to continue to report on. And $7.65 was the biggest trade win in one single trade. I can't remember, that was probably in April or May. Hasn't been replicated since then. The biggest loss was 58 cents. So today, if you remember, I talked about one that was 51 cents, so it was close to this, but it wasn't the highest. So we've had a worse loser in the past. Average profit per launch is 26 cents, which is still fairly healthy. That means for every trade I take, I'm guaranteed 25 cents. Not guaranteed, but I average about 26 cents. So if you take, 1,000 shares, that's $250 per trade, whether just an overall average. Overall profit factor is 4.39, which means that the total winnings that I've made are 4.3 times the total losses. So this is absolute dollars versus percentages. And then the overall profit per share is 157.04. Again, you multiply this by the number of shares you typically trade to give your net profit for the year, or your gross profit for the year. So overall, fantastic performance. And I am personally surprised and can't tell you how much I'm surprised about this. It's just mind-blowing. On a profit to risk versus profit taking accuracy chart, so this is the one we share every week, shows the weekly performance as well as the yearly performance. So ending November 10th, the year-to-date actual on the profit to loss ratio is 248%, and the accuracy is 63.8%. So this puts us well within this profit zone with a very healthy margin, and that's why you see the portfolio the way it is. Now, for this week, we were above average, both on the profit to loss ratio. So our plan was to be at 128, and we ended up being at 274. So that's even above the overall average. So this week helps pull our average up from a profit to loss ratio. And then from a weekly actual accuracy, we were at 67%, which also pulls my overall accuracy a little bit. So we were well within this profit zone, and very, very strong week, and that shows in all the stats as well as in the net dollar profit that we made. So as of November 10th, what stocks remain on the launch list? So these are active on the list, and DRNA is a special case and kind of violating a little bit of my rules. So I made two mistakes on this stock. And the first one was the fact that I didn't take profit when I had the opportunity to take profit. So this is not the original profit window, but my plan there was initially to enter at 805 and get out at 845, I believe, which was around here, and it did actually meet that. I don't know what, I was distracted probably with something else, didn't take my profit. Maybe I was thinking greed again, because a lot of the other stocks that I showed you pushed higher above my profit target. I said this one might, just follow the herd, and it didn't. So I didn't take profit. I ended up stuck with the trade, and it came down, and then actually here came below my initial abort price. But it's only one stock. I've never given myself really any slack, so I'm giving myself some slack on this specific stock just because I think it looks very, very strong from the performance here on November 2nd. As well as it's continued to push, and I put it on the launch list on the 6th, which is right here. So if you look back all the way back, it's kind of clearing up an area that it hasn't seen since 2016, since last year in January. Very, very strong buying volume coming in, not a whole lot of selling overall. It staged this huge move, pulled back, nice consolidation, very low below average, and then it pushed again higher. So I don't know, this could be a long-term swing, or my goal right now is just to get a profit target of $8.60, then I'll get out, and I've given myself a little bit leeway on the abort price to $7.60. So whatever happens, I'll probably just respect that moving forward. In terms of stocks that are waiting for launch, There's cleaned up the list a little bit. Some of them that were, if you've followed the last week waiting for launch, I've taken a lot of them out because they've departed so far away from their initial entry point. What happens with those stocks is I have alerts for them, so they might come back later and trigger. If I get the alert and look at this chart and it looks healthy, I will trade it. I will not necessarily put it against my statistics because I would consider that time sort of an intraday trade and I don't really track for the purpose of the launch list process. So they go in the back burner. It doesn't mean that they're dead. You know, it could happen in a month from now that they come back to that area and go further. But right now, this is these are the stocks that are left after I cleaned up that list, and these are the stocks that potentially are still kind of waiting on launch. So we can go over them looking at the charts quickly and one by one. The first one was DEST. That one has been on the list since October 25th. And here's the chart, the daily chart. So if you look at it, it came on the 25th, basically trying to break this resistance area. It has failed to do that. The profit window was somewhere in this range here, which is, you know, coincides with where the 200-day moving average is going on. It showed some very strong growth there, and then pulled back, maybe another cup. So I think that still has some potential. It hasn't really collapsed yet. It's still holding above the 5, the 9, the 200, the 20, and the 100. So it's moving above all moving averages. It is trending upwards. There's no doubt that the trend is upwards here in this range, and overall maybe through this range it's still upwards. You know, it's making a higher high and a higher low and hopefully a higher high coming up in the next few sessions. So that still remains on the launch list. Next one is SCSS, and that one I have mixed feelings about. I didn't want to pull it out. I don't think it's totally collapsed. You know, the pullback here is about below average volume. It has violated some of the daily moving averages, but still it has some room potentially if it pushes there. The interesting thing about this stock is the average true range is about, you know, $1.25. So when it does move, it moves roughly, you know, it could have a whole dollar roughly moved in the day, either upwards or downwards. So I'm still going to keep it on the launch list. If it triggers above the 34.70 cent area, it has potential profit of about 40 cents to this level here at 35.10. So just keep it on your radar and have the alert. When it happens, it happens. Next one is SRRA. That one, same story there. It was looking very good with a potential break of this level here, $2.27. Again, that's an area it hasn't been at since, let's see here, all the way back here, June of last year. So very, very slow mover, but this huge volume spike here was kind of eye-opening. It was trending upward. I know I got a strong long indicator here, but it's pulled back. It failed to test that area. So pulling back, consolidating, still above multiple daily moving averages. It looks good. So I'm keeping it on my watch list. If it hits $2.27, I'll take it to $2.44, hopefully. Hopefully it will be a nice above average volume. Look, if you look at all this, the last few days, it's been very, very low volume, which is a good, healthy sign. That means some consolidation is happening, and we might be staging another potential break upwards. Another small cap on the list is Eyes, and I like that company just because they are finding or developing a tool to cure blindness, and the company itself is not necessarily the best run, at least from what I can tell, but the potential and the hype is there. So this day, it was a big volume day. It ended up closing lower than when it opened, but it was a gap up, and that's why it was attractive for me to put it on the launch list. The idea there that we need to clear the 200-day moving average, clear up all this kind of mess here, and then shoot for this profit window where we had a large move on September 11th. So my idea there is to break through the 132 level, push for 145. There's probably some profit opportunity in this area. where people either are pushing to break this level here versus people unloading that might be stuck, who bought the stock, here a few, back in mid-September and still holding on to it, hoping to get out. So interesting dynamics. I'm not crazy about it. I'm just kind of a small cap that potentially might have some potential there. WERN is the next stock, and that one was on the list on November 3rd with an idea to break $36.30 with a profit target at $36.70, so about 40 cent profit window. The reason it came on the launch list was because of this day here, had above average volume, overall kind of consolidating and maybe testing. This tested it once, twice, 3 times, 4 times. So the idea was maybe it will try to test it again the 5th time. When I saw this green day, it said, okay, well, if it breaks this level here, that maybe it will go for a test. It hasn't done that yet. It's pulled back. Most of the average volumes are kind of concentrated here, so you could argue that it's unhealthy move, but it still found support somewhere at this level here. So I think it's still a valid trade. The volume has been below average. All the green volume, or the green days where it ended up higher, has above average volume, which tells you there's some accumulation. So just keep it on your list, and the idea there is to get a quick 40 cent if it makes it. So that was one of the stocks. And then we have ABUS, sort of a mid-range price stock. Again, made this nice move, pulled back, looked like it was potentially pushing back up here. We had 1 day, 2 days above growing price. The idea was to try and break this resistance, to try and push this level here. It hasn't done that yet. It pulled back. It's reversing now, so we'll see what it does. I'm not yet giving up on it, and I'm keeping on my launch list. Again, it's visiting an area or dabbling in an area that hasn't been there since 2015. So we'll see what happens the next few. Looks like they had good earnings, and maybe zooming towards that area to get our profit and get out. And then the last one is ACLS. Came on my scanners again and put it on the launch list for November 6th, and that one was, obviously you can see, very strong uptrend, very strong volume day, made a nice move, but then it failed at this resistance level, which is a resistance it hasn't seen since the dinosaur age, probably. I don't know, it's been a while. Let's look. Looks like here, all the way back here in 2007, so certainly a very long time ago. So it looked like it was staging what you consider an all-time high, or at least an all-time 10-year high, and it failed to test it again, pulled back, consolidating at this level here. Not too unhealthy, so just keeping on the launch list. The idea there to break 36.26 with a profit target at 36.59, which was basically about a 30 cent move there, 33 cent move there, and with this kind of sign, sort of a tight stop. It still looks good. So these are all the stocks that are on the waiting to launch list. I'm still going to work on a brand new launch list for Monday, November 13th, and that will be coming up later tonight. So keep your eyes open for that. And before I leave, sorry, that's not the right one. Let's see here. Just want to remind you about Trade Ideas. So Trade Ideas is a scanner that I use to find all my stocks. They are offering a nice discount code for the month of November. The code is Studio Time, one word, all in caps. It will give you 15% off the first month or the first year, whether you take the standard or the premium subscription. And I made it easy for you to find that information. If you go to Profit Mission Control / Trade Ideas, that will take you to to the Trade Ideas page that I have on my website, and there's the code for the month. You can take this code, copy it, and then choose your product here. I show a comparison of all the features of the different products. So let's say you decide to go with a premium monthly. You click on that, it'll bring you to the order page, and all you have to do is put the promo code and apply it, and you will get $28 off a monthly subscription for the premium, or if you want to try a different product, you can apply it there. So hope you guys decide to subscribe. Again, the foundation for any strategy that I talk about is finding the right stocks, and if you don't know how to find the right stocks, then you might as well not trade at all, because following the herd, following all these people that chase penny stocks, yeah, the shippers had a great move last week or last couple weeks, but most of the people that got into them ended up being hurt. That's not the way to trade, and that's not the way you're going to make money in the stock market. So one kind of note before I leave is you can follow me on these channels. I kind of flashed a little bit this calculator. If you remember, we talked about that in my prior video. So what I'm trying to do now, and hopefully you guys might be getting excited about this, but I'm trying to find a way to start with a small account and grow it. So I'm looking at 3 options, and one of them is Use Stock Trade, one of them is TrueTrader, and one of them is TradeNet. And I'm putting all these models or scenarios in my calculator, and I'm going to be presenting a video just to compare those 3 trading platforms and how you can start with a small account. What's your best option starting with a small account with those 3 options, and deciding what to choose, and how, understanding the pros and cons of each. I've personally tried all 3 of them, so I have, I would say, hands-on experience on them. I haven't personally used Robinhood, so I can't really include it in that comparison, but I will show you what I have on those 3 platforms. So that video should be coming out hopefully within the next few days, and I hope you guys find it useful. So thank you for sticking around today, and I hope you guys had the great rest of the weekend. Please don't forget to subscribe or watch some of my prior videos. Have a great afternoon.